Hello and welcome to Sophie & Co. I'm Sophie Shevardnadze. This year has seen plenty of political turmoil, but so far it looks like all the conflict hasn't had much effect on the world markets. To discuss where the global financial system is headed, I'm joined by Dr. Doom, the man who predicted the 2008 economic crisis. Financial analyst Peter Schiff is my guest today.
The world's financial center and its top economy, the U.S. leads the globe, and so does the U.S. dollar. The greenback is not just America's money, it's the world's. But is anything backing the global reserve currency? How much longer will the dollar's reign last? And when it's over, who will suffer the consequences?
Peter Schiff, leading financial analyst, CEO of Euro-Pacific Capital. Welcome to the program. Great to have you with us. Now, you've said it's not global turmoil but the Federal Reserve that's causing damage to investors and the U.S. economy. How so?
Well, right now, a lot of people don't appreciate how much damage the Federal Reserve is actually doing because there's a lot of false optimism right now regarding the success of the Federal Reserve's QE program and its 0% interest rates. People believe that it's been successful at reviving the U.S. economy, and that's why there's some interest in the dollar in our markets. But all the Fed has succeeded in doing is exacerbating all of the problems that caused the '08 financial crisis, and they've inflated a much bigger bubble. So I think the crisis that we have coming is unfortunately going to be much worse than the one that passed.
But if you look at all the geopolitical turmoil across the world, you have the crisis in Ukraine, you have the Middle East, you have the ISIS. It does seem that to a large extent the markets are shrugging it all off too. Why is that?
Well, I think a lot of people are delusional. They believe in this false narrative. They have confidence in what the Federal Reserve has done. They believe the forecasts of many of the economists about vibrant growth in the U.S. economy in the years ahead, and of a tighter Fed where they raise interest rates and the economy continues to expand. All of that is impossible. The Federal Reserve has placed itself in a position where they can never raise interest rates. In fact, I don't think they're going to be able to go very long without launching another round of quantitative easing, because our bubble economy is completely dependent on the continuation of that policy. And when the Fed takes it away, we're headed for a massive economic collapse.
So just let me clarify, are you saying that the worst is still to come? Is that your prediction?
Well, absolutely. I mean, we haven't solved any of the problems that led to the '08 financial crisis. In fact, all those problems are now larger than ever because of what the Fed did. The Fed interfered and prevented the market from solving the problems that years of bad monetary policy created. And as a result, those problems are bigger and the crisis looms larger than ever.
Let me ask you a few questions about the sanctions, because as you can imagine, it's a huge topic over here. Now, from where you stand, from your standpoint, as far as you're concerned, do you believe that the U.S. measures are genuinely hurting the Russian economy?
Well, I don't know how much they are impacting the Russian economy, but I do think that the sanctions will undermine the U.S. relationship with Russia and with other nations. And of course, America depends on emerging economies like Russia, for example, to buy our bonds, to buy our treasuries, to help vendor finance the voracious appetite of American consumers, even though that appetite to consume is not matched by the ability to produce. So America really needs to live off of the charity of the rest of the world. And I think, obviously, it endangers that relationship when we antagonize all the people that we depend on.
But how much exactly does America depend on economies like Russia? How long till the U.S. sustain the sanctions against Russia without causing damage to its own economy? Because more than bonds, I'm just thinking ExxonMobil is already feeling the effect of sanctions. I mean, having to shut down the Arctic drilling and all.
Yeah, I think America is the most dependent country on the planet. We depend on the rest of the world like no other country does, because we don't have the ability anymore to produce the consumer goods that we require. And so we count on the rest of the world to fill the void, to send us all the goods that they produce in exchange for nothing. because we don't have the exports to pay for our imports. We count on the world to lend us the money to buy the products that they produce. So we have the world's biggest trade deficits, the biggest current account deficits. We're the world's biggest debtor nation. And so in a way, we're like a global economic parasite. We feed off the rest of the world, and we need to maintain the illusion that the world depends on America instead of the other way around. But of course, in the long run, I think this relationship is doing far more damage to America than to the global economy, because eventually the world is going to figure out what we're doing, and they're not going to want to support it anymore, and the world will pull the plug on America. And then, of course, because this has gone on for so many years, and our economy has been able to evolve in such an unsustainable bubble fashion, that it's going to be very, very painful when we have to live within our means again and start to produce and save rather than just borrow and consume.
Well, you're saying that it's an illusion that everything depends on U.S. economy so heavily. So would the U.S. have any real leverage in this economic standoff with Russia if it wasn't for Europe, if it wasn't for the EU who are imposing the tough sanctions?
Yeah. Well, certainly Europe is an important part of it, but I think the only leverage we have really is one of the false perception of the true nature of the U.S. economy. I mean, we still project an aura of strength, but people don't look beneath the surface to really figure out how vulnerable and how weak the U.S. economy really is, and how much it depends upon the generosity of the rest of the world, and really the foolishness of the rest of the world to continue to loan America money that America can never repay and will never repay. We simply borrow more and more money. And of course, we still project strength through our military. We do have an enormous, military capacity, but we count on the world to pay for it. Left to our own abilities, America cannot afford the military that we have. Certainly, we couldn't afford the presence that we have around the world. We couldn't afford to maintain and supply our troops were it not for the money we're able to borrow, in many cases, from the people that we're theoretically, defending ourselves against.
But the U.S. produces one key product, the dollar, and it happens to dominate the world's financial system. So are we going to see that change?
Well, I mean, the dollar's not really a product. It's an IOU, but there's nothing really behind it. And it doesn't cost us any money to create dollars. I mean, there's no resources expended. We don't need big dollar factories. The Fed just pushes a button and they magically come into existence. And there's no real value there. You can't consume it. It's all about, perception. The fact that people think the dollar will have value in the future and they'll be able to exchange it for the things that they really need. But once that perception no longer persists, when people realize that the dollar is nothing but an empty promise, an IOU nothing, nobody is going to want our dollars anymore. I mean, at one point, the dollar was backed by gold. So people wanted dollars because they could get gold. But you can't get anything for your dollars. And at one point, people also wanted dollars to buy the products that Americans produce. But people don't want American products. They want Chinese products. So what good are dollars?
But hold on, but when does that perception of dollar becomes obsolete? Because right now, it doesn't seem to bother anybody.
I know. Well, sometimes these old habits die hard. It takes people a long time to recognize something. I mean, think about the dot-com bubble, or think about the housing bubble, and think about all the crazy things that so many otherwise intelligent people believed until one day they no longer believed it. So you have a lot of people that have a misplaced sense of confidence in the U.S. dollar. And ironically, because there are so many problems in the world, there's problems in Europe, there's problems in Japan, and politicians and central bankers are doing foolish things in those countries too. I mean, we don't have a monopoly on economic stupidity in the United States, but because so many other countries are doing foolish things, people take refuge in the dollar. They buy dollar as a safe haven, even though they ignore the fact that the problems in the United States are actually larger than the problems in the countries whose currencies they're selling in order to buy dollars. So we benefit from everybody else's problems, even though ours are bigger than anyone else's.
Right, but beyond the dollar, which you say is just a bogus piece of paper backed with nothing, I mean, the U.S. is one of the world's top manufacturers. It is the world's #1 economy. I mean, surely its economy is based on more than just a paper.
Well, it's only the #1 economy because we have access to so much cheap credit coming in from around the world and because we can run these huge trade deficits. If that wasn't the case, the real value of U.S. GDP would implode and we would no longer be as large an economy as we are now, thanks to the fact that the rest of the world artificially props it up. And I think that those actions of diverting scarce resources to the United States undermines economic growth outside the United States. But yes, to answer your question, there is a competitive part of the U.S. economy that still remains. But that portion of the U.S. economy that is productive, right, and is competitive, gets smaller, every month. I mean, we keep contracting that part of our economy, and we keep replacing it with the bubble part of the economy, the consume, the spend, the government sector continues to expand, whereas the real wealth-producing component of the U.S. economy continues to shrink in proportion to the whole.
All right, Peter, we're going to take a short break right now, and when we're back, we'll continue talking to leading financial analyst Peter Schiff about the future of the world's financial system and what role the dollar will be playing in it. Stay tuned. All right, we're back with Peter Schiff, investment specialist, CEO of Euro-Pacific Capital. Great to have you back. Now, like you said, the U.S. economy policy allows it to take economic advantage of other countries. And yeah, we've seen many instances of that, growing richer as others grow poorer. Is that sustainable? Because it does seem to be working for America somehow.
Well, no, it's not sustainable because eventually the people who are working in factories for low wages around the world to produce products that Americans can enjoy but that don't produce, eventually the people in other countries are going to want to experience the gains. They're going to want to enjoy the fruits of their labor. Right now, America enjoys the fruits of everybody else's labor, and this is unsustainable. The crazy part about it is that economists, even in the countries that are undermining their own standard of living in an effort to prop up an artificially high living standard in the United States, think that they're acting in their own economic self-interest. Because you have countries that think that having a weak currency is good and promoting exports is good. But it's not. Exports are only a means to an end. It's only important to export to pay for your imports. You don't export for the sake of exporting, and you don't export for jobs. Again, jobs are a means to an end. What everybody really wants is a higher living standard, which means they want access to more consumer goods at lower prices. And most countries are pursuing economic policies that are at odds with their own self-interest. What would be better for other countries to do is to allow the dollar to drop, to stop buying dollars in treasuries, to allow their own citizens to enjoy the enhanced purchasing power that would come with a stronger currency so that they can buy more consumer goods and enjoy higher standards of living themselves.
Do you believe the U.S. dollar is bound to lose its reserve currency status at some point?
Yes, I do, because I believe that we will continue to live beyond our means in America. We will continue to print dollars and borrow money that we can't repay until finally we owe the world so much money. The world finally recognizes that they're never going to get paid, and they stop throwing good money after bad. And when that happens, then I think the dollar will collapse. I don't think we will be able to raise rates substantially enough to stop the decline because our economy is too over-leveraged, and I think politicians will resist the solution. And so I think the dollar's days are numbered as a reserve currency. How large that number is, I don't know. I've been overestimating for some time now the intelligence of the global community to figure this out. So people are a lot dumber than I thought. And when they're all going to wise up, I have no way of knowing. But there's an old saying: you can't fool all the people all the time. And America is not going to be able to fool the entire world indefinitely with respect to the U.S. dollar.
Now, the Republican Party recently endorsed a platform that supports a return to the gold standard. How real is that? And if that ever happens, when? How exactly
Well, I
would
do
that
think
happen?
eventually a return to the gold standard is inevitable in the United States, and not only in the United States, but around the world. You know, the Swiss are going to be voting at least in that direction in November about whether to require the Swiss National Bank, the Reserve Bank of Switzerland, to maintain 20% of its reserves in gold. Hopefully the Swiss will vote that way, and that will be a step in the right direction for the Swiss to reclaim the soundness of the Swiss franc. But ultimately, the system that the world is on now, this fiat system where the dollar is at the center of it, does not work. And it is the root cause of all of the global economic imbalances. The booms and the busts and the financial crises have their roots in the current monetary system that cannot work and cannot function over time. And so eventually we will go back to a monetary system that works, and that is one that is anchored in gold, because money must have real value. It can't just be pieces of paper that politicians can print in unlimited supply. It must be tied to real production. It must have intrinsic value. There must be some limiting factor to limit its supply. And gold works better than anything else. It has worked spectacularly well in the past, and it will work just as well again in the future once we re-embrace it.
Yeah, but what are the guarantees, though? What are the guarantees that a return to fixed currency would work now in the 21st century? I mean, it would mean a more volatile economy, higher average unemployment. What are the benefits of a gold standard for the United States now?
No, it wouldn't. No, it wouldn't. If you go back to the 19th century, certainly the latter part of the 19th century and the early part of the 20th century, when we were on a gold standard and nations were on gold standards, the economies grew more rapidly. I mean, certainly in the United States, we had more economic growth, we had lower unemployment, we had a smaller divide between the rich and the poor. The country operated far more efficiently and to the benefit of more people when we operated under the discipline of a gold standard. You know, the founding fathers, those who wrote the Constitution and founded the American Republic, they understood the benefits of sound money and the evils of paper money. And they put America on a gold standard from the very birth of the Republic. And we should heed their advice. They were very learned men. I think they were much more educated and understanding about economics than the people who lead the United States today. So to try to suggest that we would have a less robust economy if we went back to a gold standard, mostly that's propaganda from central bankers and politicians who want to scare us from going back to something that works. Because when you go back to the free market, right, the politicians and the bankers lose their power. And they want to maintain their power by scaring people into thinking that if we just go back to freedom and market forces, that somehow that's going to be bad, and we have to surrender our freedoms to politicians and bankers because they know much better than the market. They can divine the proper rate of interest, and they can manage the money supply or centrally plan the economy, and that it's going to be more effective than free market capitalism. And that is just not the case.
Now, Peter, some countries are already beginning to move away from the dollar. For instance, Russian oil companies are now accepting yuan payments, for example, and the Chinese currency may well substitute the dollar as the world reserve. Will that be a healthy move, you think?
Well, I think for the rest of the world, yes. I think the more distance the world can place between itself and the dollar, the better, especially if they don't want to be subjected to the whim of American politicians. I mean, if you look at the sanctions that have been levied against foreign banks by the U.S. government, the ability of the U.S. government to sanction a German bank or a French bank or a British bank or even a Russian bank, all of that is because of the dollar's role as the reserve currency. If the dollar wasn't used as often, then our power would be gone. But I can already see that. Look, I own a bank in the Caribbean, Euro-Pacific Bank, and I've already seen in the 2 or 3 years I've been operating the bank a substantial decline in our dollar volume, in our dollar wire volume. We now are doing more business in euros than dollars, and this is because the banking sector is moving away from dollars. We're being punished for using dollars. It's more and more difficult because larger banks do not want to process wires in U.S. dollars because they're afraid of the regulatory impact that that's going to have coming from the United States. So it's really the currency that nobody wants to deal with in the global banking community, certainly for the smaller banks like mine. And so this is the beginning of a trend. And more people are going to be forced to move away from the dollar. And this is something that they should have done anyway. The crazy thing about it is the U.S. government is accelerating the process on its own with FACTA and with other regulations that have been implemented, which substantially increase the costs of doing business in U.S. dollars and therefore undermine the desirability of doing business in U.S. dollars.
You know, several years ago, the World Bank said the world's financial system will be based on multiple currencies by 2025. Do you agree with that? And which currencies could step in?
Well, it's already based on multiple currencies, but certainly the dollar is the most important of those currencies. And I do think that that will change over time. But I think that a currency crisis that's coming, a dollar crisis that's coming, will shake the foundations of the global currency markets. And I don't think that we could just move from, the dollar, one irredeemable fiat currency, to another. I don't think the yen is going to be the reserve currency. I don't think the euro could be the reserve currency. I don't think there's a single currency today that has the stature that the U.S. currency had when it was originally given that role. So I think the only thing that would make sense to me would be for individual central banks to once again hold gold as their primary monetary reserve so that no single currency would dominate. Gold would be the backing, the anchor behind currencies. And of course, central banks could hold other currencies in addition to gold. But the role of gold is going to have to increase dramatically, particularly among the emerging markets. If you look at a lot of the Southeast Asian economies and Latin American economies, they have just a tiny percentage of their reserves in gold. The more mature European economies, of course, have much higher percentages of their reserves in gold.
Okay, I got you. Now, you've argued in many instances that a crisis worse than the one we've seen in 2008 is going to happen. When are we to expect that?
Well, to me, we're living literally on borrowed time, and probably what the catalyst is going to be. The world is waiting for the Fed to raise interest rates. I think before that happens, the Federal Reserve is going to launch an even bigger round of QE than the one they're almost finished tapering off. And I think when the world is shocked, into reality, when all of a sudden, instead of wondering when the next rate hike is coming, it's how much more QE are we going to get. I think that's a game changer in the dollar. And I think when the dollar resumes its long-term decline, and that begins to put much more upward pressure on consumer prices in the United States, and the rate of inflation really begins to accelerate as measured by the CPI, and the Federal Reserve does nothing about it and basically accepts the increased rate of inflation, dismisses it, tries to rationalize why it's a good thing, and this simply accelerates the loss of confidence in the dollar, and the dollar's decline accelerates to the downside. I think this will be the beginning of a currency crisis that will ultimately lead to this financial crisis, because when the dollar really starts to fall, the Fed has two choices: aggressively raise interest rates to defend the dollar, which will cause a crash in the stock market, a crash in the real estate market, cause the majority of U.S. banks to fail, and force the U.S. government to basically default on its obligations, including Treasury debt, or not raise interest rates, continue to subsidize and perpetuate the bubbles, and we have runaway inflation and the dollar becomes practically worthless. But those are the two alternatives. Neither one is going to be very good. Of course, runaway inflation and a worthless dollar, I think, are worse than the U.S. government defaulting on its Treasury bonds. But one of those things is going to happen. And of course, it's all a default, because if the government admits it can't pay its bills and defaults on its debts, or it repays its debts in money that has no value, the result is really the same from the perspective of our creditors, in that they don't get repaid, because either they get repaid in worthless money or they don't get any money. But the bottom line is still the same, because they can't buy anything with the value of the dollars they get for the bonds that they hold.
All right, Peter, thank you very much for this interesting insight. We're talking to Peter Schiff from the Euro-Pacific Bank, leading financial analyst. We're talking about the role of dollar and the future of dollar in the world financial system, and also when the next global financial crisis will hit us. Thanks for that interview. This is it for this edition of Sophie & Co. I'll see you next time.